I want to bring into the conversation now Bob Andres is the Chief Investment Officer at Merion Wealth Partners. He joins us from Philadelphia today. Bob, welcome to the show. How are you trying to calm your clients' nerves?
Well, our client base, frankly, Margaret, is the high net worth individual. And for a good period of time here, we've been in a mode of preservation of capital.
Right.
So we're playing it pretty conservative. I have been very critical of the street, particularly the equity side, as they have a tendency to see good news as good news and bad news as good news.
Right.
And so that's been our approach.
Yeah. How much cash are you recommending people have on hand? I understand it varies client to client, but on average, what are you recommending?
Well, I think it's very difficult to have more than 20 or 25% in cash, particularly in the marketplace that we address, because there's a tendency of high net worth individuals to begin to think you're not doing anything.
Yeah.
But that's the kind of number I'd put on the table for you.
You know, in these past moments of fear, a lot of money has gone into particularly the municipal bond market, particularly because of the tax-exempt status. Bloomberg reporting today that President Obama is looking to change the tax-exempt status of those bonds, change that rate a bit, also looking at capping deductions for upper-income individuals. How is that going to change your strategy? These are the very people you represent. Well,
before I even mention how it would change the strategy, I would argue that it's an inappropriate strategy on the part of the president. The municipal industry has, in the last 30 to 40 years, been attacked numerous times from a tax standpoint. And we all know today that the municipal market, through its entities, the states and local governments are under pressure financially.
Right.
Why would we do anything to take away investors at that point? It seems to me it just adds more difficulty to the entire municipal market, and we all know the kind of jobs municipal entities create in this country. I don't think it's a great approach. I think it looks to me like he's groping for some way to find additional revenues, and I don't think that will pass.
Right. You're saying what you make up in tax revenue, you'll lose on the state and local level, and that'll have a negative impact. Tell me, what are you recommending your clients put money into right now? I know you like gold, you like some high-yield corporates as well?
Yeah, high-yield corporates have come under pressure. Not corporates, but high yield itself has come under pressure. At this point in time, I think it makes some sense. The default rates are relatively low. In the corporate world, I would go for high-grade corporates, companies that have a difficult barrier of entry, that have $1.5 tons of cash. I'd look at those compared to municipals, frankly, on an after-tax basis. I still like the Treasury market, have been an advocate of the Treasury market for a long period of time. It's not inconceivable that the 10-year Treasury goes down to 1 3/4. That's a nice return from the 1.95, 1.98, 2% level we're at right now.
Right.
I like mortgage-backed securities. You have to be very specific about the types of mortgage-backed.
That's a market you have to have some real inside knowledge on. That's not for the everyday retail investor. That's
absolutely correct. I would reaffirm what you just said strongly. But there is value there.
All right, Bob. Bob Andres, Merion Wealth Partners, thanks for giving us your strategy in this market right now.